Good morning and welcome to the Velocity Composites PLC interim results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just simply click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Andy Beeden, Non-Executive Chairman. Good morning.
Good morning, everyone. Welcome to our half-year results presentation. I'm here with John Bridges, our CEO and founder, and Chris Williams, our CFO. I'll just do a short summary at the start, and at the end, John is going to discuss, as well as our developments around our technology and sales, a little bit of a deep dive into the market and demonstrate using some third-party analysis how the opportunities are now very significant for Velocity. And one of the key points we want to make today is we're now at a position within our industry where many of our customers are planning for the future, having been able to see the size and scale of the composite aerospace market. And we're also seeing this in other industry sectors as well, where we're working now with pilot projects with other customers. So as we sit at the half year, our pipeline, which obviously we don't publish the exact numbers for both in the UK, but particularly in the US, is significantly grown in terms of the sales opportunities. And though there are no large ones to announce today, as we've explained before, that process does take some time and has only really been able to restart in the current year. But what we do know, because it does take time and there are a number of gates to go through, that we are engaged with a lot of customers on some very large projects, and therefore we would be very disappointed if we did not see those start to be converted in the next 12 months. And we will keep you, of course, updated if there is any material news to announce or explain and talk you through those. In terms of our actual current business, you'll see that 30% growth in the half year, and what we're seeing now is the contracted business, which is usually under 3 to 5 year agreements, is starting to come back. The volumes are increasing. I think 2023 will be a much stronger growth year than 2022. We still had a few bumps in the road globally with COVID and other factors around, but the confidence is coming back. You're seeing that within air travel, and as I said, John can talk you through why the industry as a whole is now planning for that growth going forward. In terms of ourselves and what's important as we position ourselves in 2022 with these customers, one of the key elements of our sales today is around the fact that we have modernized and digitalized our manufacturing processes. So it gives those customers a key opportunity to upgrade the front end of their manufacturing process, which all our large customers are looking at across the whole of their supply chain. And that investment drives the efficiencies which we can then share with the customers. And we've talked about this before, of driving our own margin into the 20% from being in the teens up to 20%. And we've seen that, improve that in the last year. And we are going to be implementing a new range of our technology, which we call our digital manufacturing cell, in the next 6 to 12 months. And that will benefit both customers and ourselves, and will be the underpin really for driving new business and winning new customers. And at the same time, in innovation and pilot studies and other projects, we have opened up a number of opportunities which are non-aerospace, and they have the potential to be as large as the aerospace opportunities that we have and are targeting today. However, the immediate wins will still, I think, be around the aerospace industry. But I do think over a 3 to 5 year strategy, you'll start to see significant growth in non-aerospace. And despite all this investment and the challenges of the past, we remain with cash on the balance sheet, liquidity in terms of our bank facilities, and within contracting with larger customers, there are also opportunities to fund the supply chain through either joint facilities or facilities with customers. So as we report the half year, you can see the top line growth. There's a narrowing of losses, but our objective obviously is to move into a strong period of profitability and more significant growth as we come out now of the pandemic. So I'll pass you over to John.
Thanks, Andy. Good morning, everyone. So actually, I'm going to hand straight over to Chris. So on the finance slide.
Sure. So just a few financial highlights from the half year results to talk through before I hand over to John to look at the outlook for H2. So sales looking in a strong position, so up 32%, 1.4 million from 4.4 million the same period last year to 5.9. A little bit of a change in mix, not huge, but core customers the same in this. And I think the main reason for that increase in growth is the pandemic situation. The same period last year, we saw a couple of lockdowns, site closures at some of our key customers, and we haven't seen the same happen this year. So we've clearly seen that sales recovery and stabilisation happen this half of the year. And as John's going to talk to, we think there's more positivity to come in as we go into FY23. From a gross margin perspective, so some mixed impact in this. This is reduced slightly from 25.1 to 23.5, some of which was expected. But there were sort of kind of contractual margin challenges in here as we renewed some of our key contracts this time last year. But we are also seeing labour inflation and some inefficiencies that we've deliberately held to retain capacity in our manufacturing facilities with some of the anticipated recovery in H2 and next year. I think other things we're working on around gross margin, we're looking at, as Andy alluded to, our digital manufacturing cell, which is looking at increased automation and increased material efficiencies. And we do expect that held capacity to be filled with some of the growth in the coming 12-18 month period. Loss before tax and EBITDA loss both improved 0.4 million. So loss before tax has improved from 1.1 million loss to 0.7 million loss, and adjusted EBITDA from 0.6 million loss to 0.2 million loss. That is primarily driven by the sales improvement and recovery that we've seen, but also we have experienced lower administrative overheads. Some of that has been foreign exchange. We are largely on a par with our overhead base of what we were this time last year. Kind of going to good efforts to kind of maintain that. From a cash perspective, so we've moved from 3.5 million this time last year to 2 million. Large part of that, but most of that is due to working capital investments. We have seen a sales peak, particularly a couple of months before these results were announced, and that's driven our receivables up at the half year. But we have since seen that recover. And to give you a flavour, as of last Friday, our cash position was 2.7 million. So we've seen that recover and come through the cash flow. So a large part of that is down to timing, but we are seeing increased investment in our working capital for the right reasons, because the recovery and the growth is happening. So, and we're expecting that to continue. And then, as Andy said, still retaining our invoice discounting facility as of the half year, 2.5 million capacity, and that undrawn and still undrawn. We have two facilities, one with a key customer, with which we think we can leverage for growth if needed, and one with our main supporting bank, NatWest. And in terms of outlook, continued challenges. Obviously, there's supply chain disruption on a kind of global level that we're working with, and inflation, as previously unseen. We think we've got solutions to tackle both of those, and we're actively focusing on them. So, in terms of outlook, in line with expectations at present.
Thanks, Chris. So, as Andy mentioned earlier, I think it's worth just reflecting on what's underpinning the recovery of obviously existing business and ultimately new business as we look to engage with existing and new customers. So clearly the ultimate driver of all this is air travel, and this chart really gives everyone a bit of a sense of how that recovery has taken shape. Obviously, the latest data was of March, but really it shows there's a bit of regionality to it, as you know, perhaps some continued lockdowns in the Far East curtailed the recovery in those territories a bit longer. But essentially, we're seeing quite a strong bounce back in air travel, and I'm sure we're all sort of see the news stories of disruptions at airports as they manage their recovery. But ultimately, we're seeing, thankfully, a nice strong recovery as people want to travel and recover their travel. A lot of that's driven, certainly locally and regionally with single aisle travel, but also the longer distance twin aisle travel, which are more composite heavy platforms will follow. And as we've talked previously, there's a knock-on effect here of airline fleet renewal as they sort of retired off their older fleet through the pandemic, and starting to replace those with more modern aircraft and return to service their more modern fleet as well. You've got the usual correlation with oil price driving more efficiency in newer aircraft as well, and unfortunately that remains quite high at the moment. But again, that just forces the economics around a renewed fleet compared with extending an older fleet. And as we say, the composite heavy platforms, the twin aisles, will recover as that inter-regional travel returns. The next slide really just puts some of those per platform numbers, and this is it's Wikipedia, but it's public information from both Airbus and Boeing. It's just been correlated nicely here, but you can see the sort of production levels and aircraft deliveries at pre-COVID levels, how they were impacted, and how they're starting to bounce back. These 2022 numbers are year to date as of this week. But single aisles were always the stronger numbers. Deliveries, they've obviously been impacted around 25%, and then in the 737 MAX, they obviously had some significant issues prior to COVID, which they're recovering from as well. But again, we're starting to see those numbers come back, and are forecast to bounce back into next year quite strongly. And then the equivalent Airbus platform 320 series, again, you see strong recovery because they weren't impacted by the same issues of 737 MAX. But again, they're high rates, slightly smaller composite content, but still significant in composite consumption. And then the more composite focused platforms, the twin aisles, the intercontinental aircraft, we're seeing those being reduced by 50% of production rates and deliveries, and then starting to recover through next year and into 2024. But again, just gives you a good flavour of the Airbus and Boeing split, the platform recovery, and the numbers that we expect those to recover to. And like I say, both suppliers publish their data very regularly in their market forecast documents, which are available on website. It's a good summary, and it's sort of, so you can see the impact and the recovery start to bite. And then longer term, what we're also seeing, and we talked about this a little bit as well in the sort of full year back in January, where okay, we've had COVID, it's been impacted. A lot of older fleet was retired. There'll be as that recovery returns, there'll be the normal replacement cycle of those aircraft with newer generation, higher composite content aircraft. But also on top of that, you've got the added targets and pressures of a real stronger net zero agenda now that's biting the industry quite hard. And one of the sort of advantages there, certainly for composites, is that composites will be driving a lot of efficiencies, a lot of the lightweight airframes, the longer, higher efficiency, longer travel, but also much more efficient travel in the shorter journeys as well. There's a very clear agenda within the industry to get to net zero by 2050, supported heavily, and I think just by the information flows that we're seeing from news, from marketing, from airlines, from aircraft manufacturers, huge push towards net zero, and composites have got a very, very significant role to play in this sort of decarbonisation and the reduced emissions from air travel and the sustainability. And then looking forward, sort of near term into H2, what are our priorities? What are we, really focusing on as the recovery starts to bite? Well, clearly we're expecting UK new business to recover as customers are more engaged, as our customers have been through their own restructuring plans, and they start to look towards how they're going to navigate the recovery. And again, as we talked many times before, we see our services as key to helping them to recover as they look to build back differently and more efficiently from the sort of reductions that they've seen through COVID. And as Andy mentioned, UK pipeline is still active and strong. And again, we hope to bring updates through the second half of the year there. Also, as we've talked about, we've been able to restart business development further afield. And pre-COVID, we'd had a lot of focus on North America. We see it as a very attractive market and a large market in terms of our services and the need for our services, with both a very, very strong defence market and a strong civil market in composites as well. So, as we said at the full year in January, thankfully that travel and engagement with customers has been able to restart, and that's progressed very well, and we're expected to be able to announce progress again in H2 as that develops. And I think some of the questions talking about the sales cycle, you'll see as that sales cycle progresses, and as we go through that initial engagement through to getting data and understanding their current state, developing a competitive bid, and then also getting that through their layers of their organisation and sort of management and executive approval, and then moving more into the sort of first article and the onboarding phase as they look to turn off their existing internal supply of these services and move to our more efficient external outsourced supply. So yes, I think we've talked before, we can go into detail later about the length of that, not just a customer engagement cycle, but that whole customer onboarding cycle. And as we say, lots of activity in North America. As Andy also said, the planned investment has continued in our new business and technology. I think as a board and as an exec, we were very keen, at the start of the pandemic, to actually survive the pandemic, as everyone was, but also to survive the recovery. And we had lots of discussions around how difficult that would be as well. Thankfully, the continued investment has proven very worthwhile, both in terms of people to help manage that start of that recovery and manage some disruption in the material supply chains, not necessarily in pricing, because as you know, we have a lot of flow-through pricing, probably all flow-through pricing from material suppliers into end customers. But our material suppliers have seen some disruption in their own business as they build back their people and plant capacity. So we've been able to work with them and our customers to manage that using technology, using that real-time data to help drive scenario planning and to mitigate any effects of delays in materials or challenges in the material supply chain. And that technology also helps us to then be more efficient internally, not just in existing business, but also drive more compelling business cases for new business, and have that, much more real-time, sort of harder data in terms of the whole management of, customer demand, material ordering, material management, batch traceability, and then obviously managing that throughout production areas, and being able to utilize much larger, more efficient nesting scenarios to drive that whole efficiency, the whole of the supply chain that we manage, for ours and our customers' benefit. And I think, as Annie mentioned, key to that is the full implementation of our digital manufacturing cell. That is really where all that technology comes to bear on the production of the kits, and where that, a lot more data is generated to be fed back into improvement activities. So, that started, and will continue into H2 as we, open up our capability internally to do things much more efficiently, but also support newer business and growth. And then also how we deploy that technology. Clearly our model has been focused around, larger service centers in clusters of customers where we can support multiple customers. As we evolve, and as that technology allows us to evolve, it really does open up different ways of working. So one of the sort of next stage opportunities is what we call forward stock locations. So that's, as we've driven to maintain our operational capacity through COVID, as we recover, the key obviously is to utilize those facilities fully, to derive as much efficiency from scale as we can. So this forward stock locations allows us to really continue to load those plants and get as much efficiency as we can from them, but still be able to serve customers locally by having stock at their site, managed locally on their site, and still give them the great service and responsive service that they need. So that's a model that's being deployed now with some real live business opportunities with current and new customers. But I think that'll be quite an interesting model as we go forward, and give us a lot more flexibility in how we deploy and grow over the coming years. And then, as we also talked previously, the ultimate evolution of that is what we call more of a managed service model. So that is really using the technology centrally, but to have manufacturing, mini manufacturing cells at customer sites, still controlled by us, still owned by us, delivered by us, but being able to utilize some spare operational floor space at customers, which still gives you that local service and local support as well. So again, that's going to be a clear output from all the technology development that's going on, both in terms of the digital cells, but also the sort of core modules of that technology. And as Annie said, we also continue to develop in new non-aerospace applications, and we've had some small scale wins there as the technology and the service model's been adapted to suit those. It's, those wins really underpin the belief that the business model that's been developed in aerospace can be, if you like, turned down and adapted for non-aerospace applications. The core functionality is still the same, and we'll continue to progress those through the second half as well. So, Andy, would you like to summarise, or
yes?
Do you want me to?
No, thank you, John. And so, half year, as I said, just showed growth, and fairly significant, I guess, compared to many businesses, but it's very much a reflection of those same contracts that we had all the way through the pandemic starting to recover in the UK. The investment in the technology, and we did have an investor day a while back, and we'll have more of those to demonstrate our technology to investors, as well as obviously demonstrated to customers. Has significantly been upgraded, and it is the sale of technology and service which is key now to the success of the company. And that technology has a value in itself. Cash remains robust, and One of the questions that has come through is what's the cash forecast at the end of the year? We expect to remain around the sort of 2 million level of cash based on our current trading levels. The key we recognise is winning that new business and converting it. And there are a tremendous number of opportunities. We have various types of pipeline and analysis, but we are engaged with new business opportunities, so worth over 100 million across the UK, Europe and the US. And it's about converting that engagement and pilot studies and other business cases into meaningful new business that we can then grow and develop over time. So I thank my colleagues, and we will now pass it back to look at the questions that have come through.
Fantastic. Thank you very much indeed. Thank you all for your presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions submitted already, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we have received a number of questions throughout today's presentations, and thank you to everyone who submitted those so far. Could I just please ask you to read out the question where appropriate to do so and give your response?
Yes, so I'll read the questions, and then the first one, we've had some slides on this before, and they are on our website around the sales process, but the specific element which is new here in that question, the first element is talk through the sales process, and John can do that again, but there are some slides that we've published on the website that go through the different stages of that sales process. But one of them is also a question, do we get designed in? I guess what I'm designed in on new platforms. One of the key things is that we target customer facilities. Clearly that can be certain platforms, but our objective is to take over the entire facilities business. Once we do that, any new business, of course, that customer puts through that facility, we provide a full service to support them in that. That is a critical part. In terms of the new business that we're targeting at the moment, we obviously are trying to take over new facilities or facilities that have not used our technology before and get them to start to use it. And that is predominantly current business, but will involve some new business as well. And sometimes it's the new business which they would want to experiment and try our processes with. But we don't specifically get designed in. That is not our objective at the moment at the start of a new platform or project, because the meaningful opportunities are to get people to convert their current factories of all their work to our technology and services. I mean, John, do you want to have a very quick talk through the gate process?
Yeah, so as Andy said, the sales process can be quite lengthy for obvious reasons. This is the front end of our customers' manufacturing process, so we need to get it right. They need to get it right to keep the rest of the facility functioning. And clearly as well, it's a very regulated business. So thankfully, we all want to fly safely. So in terms of how we handle raw material, needs to be very regulated as well. So in terms of the designed in aspect of it, we designed in by keeping abreast of all the sort of global qualifications and specifications to make sure that our service meets them all. That's how we ensure that we're designed in per se, by being able to be representative of all the potential requirements from any new or current customer. And then in terms of the engagement process, because this work is already being done by the customers in-house, there's no sort of, if you like, customer-led formal process here. It has to be, really driven by us. So we've got a very well-developed gate process for all new business and current business, where there's that initial front-end customer engagement, and this is all around building the relationships, getting to the point where you understand their current processes and current state, but then also working with the customer to get data to be able to start to work out what the future state could be with that customer served by Velocity, and also turn that into the TCO model that we talked about at 4 years. So historically, we've perhaps supplied, pricing and focused around that, where over the last year or so, we've really got that a lot more sophisticated, and we almost pretty much write the new business case for our customers in terms of costing the current state, costing the future state, and showing and highlighting very clearly, at an exec scrutiny level, all the benefits of transitioning to a Velocity process. So there's that whole front-end engagement, there's that whole bid development and bid creation phase. You submit the initial bid, and it's not just a price list. There's a lot of the bid document has to contain how we plan to do it, how we plan to manage the transition, how we will sustain, how we meet all the quality approvals, all the usual, not just what it is, but also how we plan to manage that transition. And then following bid acceptance, you've then got all the onboarding process. So there's a lot of first article work to validate that our kits are the same as the customer's kits, and the whole data transfer process has been successful. There's that whole process of managing the condition of supply, how it gets delivered, when it gets delivered, the packaging media, all the usual things to make sure that the kits interface really well with the customer's existing manufacturing facilities. And then, how that's sustained, how you plan to sustain that over the, as Andy said, initial 3 to 5 year contract period, but ultimately these are, indefinite supply as, we look to form a very, very long-term strategic relationship with the customers. So, that whole maintenance piece and the sort of customer management piece, and how we will support them on a long-term basis needs to be addressed.
Yeah, and of course we have a number of agreements with customers around innovation and technology, which don't necessarily get announced because obviously they're before pre-sale effectively agreements, and we would only really want to announce meaningful financial orders rather than various sort of agreements which are just pushing and explaining our technology, or giving people access to it so they can explore to see if it will work for them. The next question is around diversity, and this is a good question. It's really saying, are there opportunities outside aerospace? And the answer is yes. Now, because of our capability and our qualifications and everything else, and the work we've put in the last 2 years, we have to focus on aerospace because it's a market that's going to double, treble in size from the pandemic position, and there is significant interest and demand, and we've got the credibility in that market, and it offers good margins and returns. So in terms of our focus today, to get some meaningful improvements in results, aerospace is number one. However, in the background, we are also opening up really pilot, what I call this, more pilot projects with non-aerospace customers, and we have them. But where we're looking there is to also ensure that we would target where they can have become large customers, and also that the margin and return makes sense. There's no point going down a particular industry, which, for example, may be able to use our technology, but their materials are very inexpensive versus the type of materials that aerospace use. Therefore, the benefits of our technology are not commercially as great to that customer, and therefore it is a matter of targeting sectors which will benefit commercially significantly for us and for our customer. But there are high-end, high-performance automotive, various other markets, such as as we see in some of the pictures, you've got wind energy, and it is our part of our strategy long term to develop out velocity to be have a meaningful element which is outside aerospace. And then the next question was, what catalysts can we expect to see in near term in terms of news flow? That should really be around advancement in the opportunities, the new sales business opportunities as they go through the gate process. That's really what should be the next elements of our news flow. And then the next question which has just come in is, which I'll read out, is about manufacturing trends. Expected that manufacturing trends to be manufacturers, to be providing whether manufacturers will will look to have our technology in their facilities, or whether we will continue just to supply from our facilities. And I would expect that larger facilities, customer facilities, could adopt the sorts of models we've been developing, where we would put our technology into their facility to ensure there's a maximum level of efficiency. That only works when it's a very large facility, where we can have a bespoke solution for it. And the question will become whether ultimately the customer's own staff would actually perform most of the tasks within our manufacturing process, and that is certainly one of the options that we are able to provide even today, so that you are really supplanting that tech into remote locations around the world, and we're not ourselves having to think about all the other logistical issues around hiring staff and everything else, but we can provide what we call a managed service, and that is part of our long-term strategy. At the moment, clearly we have capacity in the UK, and we would like to fill that capacity back up again. So the pre-pandemic, we would probably have been accelerating that service model, managed service model, more quicker. But now you've got spare capacity in the UK. What we really want to do for the UK in particular is fill our current facilities. As we move into the States and elsewhere, you'll find that there will be hybrid models being used, where we'll either be close to facility or even within a customer's facility, to maximise the benefits and minimise the overhead costs. Just looking through, there's a couple of questions for Cenkos, and what I'll do is I'll pass them on to Cenkos rather than we answer them. I don't think it's appropriate for us to answer them directly.
I think you've actually pretty much covered off everything you can there. And of course, if there are any further questions that are submitted, the team will have the ability to review those questions. We'll publish responses where appropriate to do so on the Investor Meet Company platform. Andy, perhaps before redirecting investors to provide you with their feedback, which I know is particularly important to you and the team, could I perhaps ask you for a few closing comments? Yes.
So again, the message is the same. We are advancing significantly our services and offerings. I think everyone agrees that the market size is going to rapidly increase again over the next few years, and it's about us taking up those opportunities that exist today and developing them in other markets as we go forward. And I think that combination should enable velocity not just to grow, but the value velocity within the supply chain, and then hopefully its value as a business should significantly increase as well. And we're always conscious that there are people who have invested on the IPO, and since then there's been a few bumps in the road. But you have to remember that as a board, and me and John as the senior directors are also personally invested in the company, and take shareholder value and investors' interests very, very seriously. And I'd just therefore like to thank those investors that have supported us through what has been a difficult, challenging period in the industry. And hopefully you can see as we come out now, we have a better, stronger business actually, far more advanced, and can offer very significant commercial solutions to what I see as a very exciting industry going forward. So thank you all again listening today. We're always open to questions and engagement with investors, and we also have the support of our NOMAD Senkos, and who are also there to help and support investors. So thank you.
Thank you very much indeed, Andy, and thank you to the rest of the team. Could I please ask investors not to close this session? You should be automatically redirected to provide your feedback in order that the team can better understand your views and expectations. This will only take a few moments to complete, and I know is greatly valued by the company. On behalf of the management team of Velocity Composites PLC, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good morning to you